we are going to start with our breakout session and specifically then focus on the Probe Audit Premium Plus methodology, and with that then the caseware file. If you don't have your caseware file open today, or if you have not yet downloaded it, that is perfectly fine. It is not a problem. What I do just want to highlight is I'm using exactly the same file as you do. However, if we had made changes in one of the earlier sessions, those changes will be reflecting in today's file. So I don't start with a new file every time. We build on the same file in every single one of the new sessions. So if you see something that's maybe not in your file that you just downloaded from the website this morning maybe, then it's possible that we may have already made those changes in one of the earlier sessions. Right, this is the caseware file then. And when we started, we were working in the pre-engagement planning, session 1. Session 1, we started with engagement evaluation, and we worked our way through most of those documents. The one document that we did not look at back then was the types and volumes of transactions document. So 1050 was the gathering information, where we had mentioned things like, that's where we would have said, yes, the client's registered for VAT, for example. And a number of those questions would have then had an influence on 1051. Even if we said, yes, there are accounting estimates, when we then get to 1051, we are going to look at the different classes of transactions and account balances and now actually just drill down deeper into that. So that's why we didn't look at 1051 in a lot of detail in the previous sessions, because it's very closely linked to the risk assessment and the risk assessment procedures for the assertion level risk assessment. All right, so let's open up 1051 if you've got your caseware file. If you don't, you're welcome to just follow with me. But I'm going to then work in 1051 and see what do I need to consider for my sections. So the rest of the section 10 I'm not going to look at. We have looked at the majority of that in terms of overall evaluation, understanding the client, then went to section 11 for risk assessment. We're just going to focus on a few documents today that deal with assertion level risk assessment. So 1051 then being our document. Now there we go. So being the document where we are considering the understanding that we have and updating our understanding of each of the account balances and classes of transactions. So mine is currently open with inventories, but let me just jump to property, plant and equipment, which is what we probably may have looked at before. If not yet, then at least you'll see it. So one thing maybe just to note, in our understanding of the client earlier on, we indicated that at that stage, I wanted to show you the analytical review document 1052, where we did predictive AOS. So what I've then done in preparation for today is I said, well, actually, I want to also show you, I want to show the alternative way or place where I can document the analytical review procedures. So I went to go and switch off the response in my gathering information, where we said, do you want to do, let me just go and find that question now again. Here we go. Question 7 in this scenario. Do we plan to use 1052 to perform analytical procedures to identify and assess risk of material misstatement instead of performing the simple comparisons on 1052? So for the, I think it was session 2, if I remember correctly, it might have been session 1, there we look at 1052. So we said, yes, I want to use 1052. The only change I then made for today is I said, no, we want to do it in 1051 so that I can show you the alternative. So what this is effectively saying is I will not have a working paper 1052 completed in this file. In fact, if I go and open it, it will tell me you chose not to use this one. So it's basically not available. But then the space then provided here with all these gray blocks, these input cells in the comment column is then saying, well, you said you're going to do your simple comparison analyticals in 1051, so now you've got a document. What is your understanding? Is this in line with your understanding? All right, so for property, plant and equipment, then we will go and compare, look at this and see if this makes sense to us. I mean, IT equipment that does not make sense. Something's wrong there, right? So we need to probably then go and consider that. We haven't at this point, 1051, determined the materiality yet. So we can't see if that is a material misstatement or possible material misstatement in terms of the materiality figure, but it's definitely something that would need to be investigated. All right, so that was PPE. We considered the types of procedures we performed, etc. I think I might have even, there's the possible things, and then what would have indicated was the fact that the client has an asset register, and I indicated the gains and losses and things. Let's go and have a look at inventories, and then I'm going to take you through this because this is the one that I want us to look at. So for inventories, we start off again with the balances. So you've got your lead schedule link there if you want to go look at the inventories. You've got the categories of inventory as it will be disclosed in the financial statements. see someone saying that the illustration is blurred. It might be just that I didn't see at what point that came in now. So it might just be that at that point it was the document manager. I can increase the size somewhat, but there might be other instances where it's not going to be ideal. So I hope that helps. If it doesn't help, it will definitely be better in the recording. Okay. Right. It's also probably because I'm moving around a lot. So I'll try and stay still. Right. Inventories. So the first section is the balances, where we will look at the current year versus the prior and the changes, and then to ask ourselves whether this makes sense. So I can see that I had a 20% increase in inventory this year, and I'm not sure if that makes sense. I'll probably have to consider what else happened in the business, what else I know, what else I see, that the sales also increase, things like that. So maybe this is not going to be enough for me, and I'm going to need some more information. But if this is enough, then I'll simply document in the input cell here why this is fine. If it is not fine and it does indicate a possible risk, there's an inherent risk factor, there's a change here, then I can go and record a risk, and I can just use the first one that comes to mind, the one when I scroll down. I can go and record a risk at assertion level, and I will go and pick inventories, which is the balance, and record the risk. Okay. I'm not going to record the risk right this moment. There will be a place where we're going to just show you how to edit it. And then next week, because we're going to have some more time next week, I'm going to show you exactly how to record it from scratch. All right, just the theory this morning took up quite a bit of time. So we're going to work through, I was going to say, the easier bits today. And then next week, we're going to unpack a few of the more complex ones. Right, so that's what 1051 is. Consider the analytical comparisons. As we had in the past, we also need to document the types of procedures performed to get this information. So in my file, we said we're going to document the comparisons, document the types of risk assessment procedures in every single section. Whereas before, we might have seen it right at the top of the file only. All right. And there, of course, that's where I did my analytical review. So I will document something about that. The next section for our inventories, and this is every section that we're going to see, is the procedures required to perform possible risks of material misstatement. Now, some of you might be a bit more experienced or have a bit more years experience in Probe, and you might then identify these as previously these used to be in the work program. These are considered to be risk assessment procedures and are therefore now included as part of our risk assessment steps. So we'll review the trial balance, look for any funnies, look for unusual accounts, see if there's anything that's missing that wasn't there last year or that was there last year that's missing this year, whether things are incorrectly mapped, perhaps if the client gives us a mapped trial balance, for example, things like that. Look at the items in comparison to the prior. Very importantly, you'll remember that when we audit, we consider not just whether the client's use of the accounting framework is appropriate. So they say they use SME. Is that appropriate? Yes. We also consider what is their policy in line with what is their accounting policies. And this here is where we are saying whether that accounting policy is appropriate and consistent with the requirements of their framework. And then when we get to the detail of the actual field work, we're going to say, right, is the client actually applying their own framework? Right, so that's identifying possible risks of misstatement due to not having the appropriate accounting policy. That's that section. And then lastly is the section that we refer to as transactions and balances. Now, yeah, I'm going to have to make the zoom slightly smaller so that we can just see everything that's included in this section because they are quite important. By the time I start ticking the boxes in this section, this is where I'm actually going to start switching on certain elements in what might end up being my work programs or my audit programs later on. Remember that Probe only switches on procedures for a specific assertion when we are recording a risk for that assertion. But in the meantime, as I'm documenting my understanding of the accounts, I already have certain elements or certain influences on the work program. So what is important for us to is to, in this case, for example, to say, does the client have work in progress? Well, it's a manufacturing company, they do have work in progress. So I'll switch on work in progress. And when we get to the inventory work program, there will be specific steps to test work in progress, depending on the assertions that I've activated. Do we have goods in transit at year end? Do we have goods received vouchers issued? Do we have an impairment provision? Things like that. Okay. Then accounting estimates, you'll see that is automatically switched on because the inventories has to be recorded at the lower of cost and net realizable value. Net realizable value is an accounting estimate. So we already have that switched on, and you will see that I have to go to 1053 to go and document my understanding of the client's treatment of this accounting estimate. And then there were write-downs of inventory, so I've got that switch on. And, well, we don't have any reversals of write-downs. I didn't tick that block, and therefore the procedures will never be switched on in the work program. Right. This might also then mean that at some point when we get to the work program and we realize there are some procedures missing, let's say, for example, work in progress, we might have to come back to 1051 and actually come and tick the box here. Right. Sometimes it's easier to just, find another solution, but if you understand that the questions or the points are actually activated from this section, it's easy to just come and tick the box here when you realize you forgot to tick the box effectively. Right, that's inventories. If I then go and look at operating expenses, I also just want to show you that one because it is a bit more completed. So for operating expenses, we've already done the analytical review. So you can see the movements, you can see the reasons. OPEX year on year appears reasonable. The client raises a monthly provision for audit fees, and that's why it's in there. We have actually raised the journal because it shouldn't be in there. The depreciation is in line. There was a point here to say the leases, the client indicated that no new leases have been done, and then consulting fees for business purposes, which will be treated as part of the tax calc. So there the analysis, the considerations have already been documented. The types of risk assessment procedures, again, ticked, clicked, linked, activated. The considerations of possible risks of material misstatement. The person has completed to say they've inspected the lead schedule. No mapping, incorrect mapping noted here. Under the general ledger accounts, you can see the general ledger accounts included in this section have been inspected. And here's some information for us. An insurance claim was netting off the expenses. The client has indicated that the journal should be passed to reallocate this to other income. So we know that there is a little mistake in operating expenses and there's a journal required. Right, there's also some consideration about inspecting the accounting policies for this operating expenses. In terms of transactions and balances, remember that in Probe, we also work with transactions related to account balances. So in operating expenses, one big class of or category or section of operating expenses is employee cost. We audit employee cost as part of operating expenses. Yes, there may be a part that gets reallocated to cost of sales as part of the production, but this is where we need to go and tick on the relevant parts about employee costs. So yes, we've got employee costs. Yes, there are accruals for leave pay, so we need to switch on the short-term payment, paid absences. There's no profit sharing or bonus plans here, so we didn't tick it on. If we did say there are, then we would go and switch that on so that we can actually test it. Remuneration paid to directors, that's switched on for us, and disclosure of directors, that is also relevant. There's no accounting estimates in operating expenses, so we don't have to actually then switch on accounting estimates. Right. So those then being our sections for 1051. If I go back to the document manager, I'm not going to then look at any other further documents in our pre-engagement planning section. That's all fine then. What I am going to move towards is then to go and look at the planning and risk assessment procedures, or that section 11. In section 11, in session 3, we looked at the overall or financial statement level inherent risk, fraud risk, and we also considered the system of internal control, the financial statement level, if you want, control risk considerations. We did not look at 1150 and 1160. Now, 1150 is where we consider and document the two last elements of the direct controls of internal control, being the information system and communication and the control activities. And why do I know that? Well, it's part of the name. All right, so that's quite easy. If you forget, it's in the name. Don't worry. And then next up then is the risk assessment at assertion level. That is where we go and document all of our recorded risks and see what the impact is in terms of our risk of material misstatement. Now, the interaction between these two documents are quite important. You'll remember that we said when I have a risk recorded, so in other words, on 1160, I've recorded a risk, I've documented something, then I need to go and document a system description. So I will need to go to 1150 to go and document my system description, or at least see the prompts and reference it to where my system description is. I have to, however, also document certain things about information system and internal controls, and then go to the risk assessment document. So you're either going to go first 1150 and then 1160 and go back to 1150, or you're going to go 11. Either way, you're always going to go check again on the other side. Okay. So remember, we said the planning section is iterative. It's an iterative process. So please, no matter which one you choose to look at first, always go back to the other one after you've completed the first one, the second one, go back to whatever you did first. All right. We can't copy the document and give it to you again after that to help you remember. You have to look at 1150 again. So if you first do 1150, then 60, please go back and look at 1150 again. I'm going to start looking at 1150 because I want to point out a few things in terms of what's in the document, and then we will jump between the two to see what is the impact of recorded risks on that section, or of not having recorded risks on that part of 1150. All right, so let's first start and see what is included in 1150. What does this document look like? All right, so again, I start at the top. I'm documenting my risk assessment procedures performed in this document, and included here, of course, are inquiries, observations, and inspections. Remember to document who you had the discussion with, when, and what the designation of this person is. And then just a note here, this is a new point in 1150 to say, remember that in smaller entities or less complex entities, is the new fancy term we have, right? It's possible that a lot of these controls might actually be there, but that they will be a lot less formal. What does that mean? They might not be documented. They might not be in policy manuals and all kinds of fancy things. They might not be risk committees and risk tables and risk registers and whatever else is, but they might still be there. And also, if you think about it, the way in which those controls might be implemented might be a little bit different. Even communication in the firm will be a lot less formal or a lot more informal, and with that, very often not necessarily documented. Right, so that will affect how you're going to go ask the questions, how you'll confirm that it was or wasn't done, or how it was communicated, or that it was communicated, etc. That's the first important thing. The next important thing is, I almost want to say, my sanity check, if I can put it that way, to always say, what is the minimum that we need to do in 1150? And it's almost like an inverse way of asking you, because what the document says, it says, in this document, you are prompted, and the standard requires that you do at least the following. Do you want to do more than the minimum? That's basically what this question asks, where it says, elect to identify and evaluate controls. So the standard says we must at least consider controls that address significant risks. You might say, hang on, this sounds familiar. Yes, it was in our slide earlier on. I need to at least understand and identify and evaluate controls that address significant risks. Controls that address risks for which substantive procedures alone do not provide sufficient appropriate audit evidence. Now, here, the probably boring example, but a very relevant example, is the retail example. If you think about the retailer where you go and buy a lot of your groceries, it is impossible, totally impossible for us to test the completeness of that revenue through substantive procedures alone. There are just too many transactions that happen during the year, and at different sections, different stores all over the place at the same time, day in, day out, thousands and thousands and thousands of transactions. We cannot test that through substantive procedures alone. We need, in order to get sufficient and appropriate audit evidence, we need to go and also perform control testing. In other words, we need to go and see if controls are operating effectively, are they working as they should, to do what? To prevent material misstatements, and to detect, find them, catch them out, almost want to say, and to correct them if they do happen to occur. So if we say we must rely on controls, what are we saying? We must go and identify those controls that we need to rely on. So before we can test the control, we have to first identify it. So that's that one. Next up, controls over journal entries. That was also on our slide. And then if we plan to test controls for operating effectiveness, if we want to rely on controls, maybe to reduce my sample sizes perhaps, then I need to go and identify the controls so that I can see if I can test them. Right, so those are the minimum ones prescribed by the standard. Now, I'm not saying that the standard says you must test controls. I'm saying if you want to rely on the controls operating effectively, you have to test them. All right, so those are the 4 minimum ones where we're going to have to go and identify controls. Do you want to do more? If yes, well, then you can actually just switch it on and it will, sorry, there I moved my screen now. If you want to do more, you could change that to a yes, but that's really what it means. What is the bare minimum I have to do? So as I say, I use this as a sanity check or as a reminder to myself. If ever I get confused, what is it again that I need to do, that I need to identify controls for? Come back to this question and immediately you will remember what it was. Good. So we said I have to identify controls over journal entries. So guess what? My first section is accounting records, and I need to document the system description for recording standard journal entries and non-recurring, unusual, or adjustments. So I need to document the system description over journal entries. Sorry, not standard, standard and non-standard. So all journal entries. I need to document my system description. this one cell can be expanded on. So just in case you didn't know, if I am documenting something here, let me just go type some below there, and I do Alt-Enter, it will actually, is it Alt-Enter? Sorry, it's Shift-Enter. You might notice at the top left there, where that almost like formula bar is, there's like a little thing there that indicates there's this a space, a line break. Okay, so I can add with Shift Enter as many lines as I need, or I can just type a lot of information, and that will also move to extra lines. So let's just give it space. You see how much I typed there? So the fact that you are only seeing one cell should not, I almost want to say, concern you and make you think, oh my word, I've got so much to say. I am aware, of course, that this is case view and it's not Excel, and you can't include pictures and all those things. So please, there is absolutely nothing wrong with just referring this to another working paper to say, please see system description on working paper, whatever. Okay, you can document that there, or you can even just actually just use this little cell here. Of course, it's for the risk record button, but if you just go and refer this to another document, and you can go to that Excel sheet that you've included as part of your system description, wherever it is. I'm just going to pick any case view document. You will see that it's then automatically going to include a hyperlink. Yes, it looks like there's a risk, but if we know that we use Excel for our system descriptions, it's not a problem. We are going to use that hyperlink to go to the Excel sheet where my system description is. So it's perfectly acceptable to have an Excel or another format of your system description. Nothing forces you to do it in this input cell. But if you only have words and you prefer to have it in the field document itself, you can expand this input cell to make it longer than just that one line. Right. Next, we need to ask ourselves if management established controls over journal entries. We said yes. If they did, then we need to go and record them. And that is then where we use the record control button. You can see that there's already one control recorded that is documented here. And we said that if a journal needs to be passed, this is discussed with Andy Crack, who then passes journal entries. No other user below Andy, so in other words, below him in the food chain, in the hierarchy, has access to the function on the system. Journals are indirectly reviewed through the review of the financial results. However, each journal is not necessarily reviewed before it is passed. Then we need to consider whether this is designed effectively. Will this effectively prevent or detect and correct material misstatements? We might say so, and then we need to document why we came to that conclusion. And here the team then said they inspected the rights allocated to the users on the system report, which indicates that the directors and Andy have access to past journals. They filtered the general ledger to show that only show journals, and inspected the users listed, and then only Andy, Emily, and Stefan were listed as users who had passed those. All right, so is the control implemented? It looks like it, and the critical thing here is not just to see who did pass the journals, but also to confirm from that system report who has the rights allocated to them. Up to this point where we say, is the control implemented? We have considered the D for design of the DNI, and we've considered the implementation for the DNI. That is what we must do for controls over significant risks. Nothing says we have to go and test controls. It's our choice if we want to test these controls. And in our case, we said, no, we don't want to test controls. Right. Another question, still part of the section of accounting records, is whether any of the controls over journal entries are dependent on IT applications or other aspects. In this case, we said yes. There was, of course, that system that had to actually give access controls in that scenario, and we then had to go and record controls, general IT controls for that. Okay. The financial statement preparation system there, just to show you the system description that is included in there. So we've said we need a system description of how financial statements are prepared, what information is used. You can see here we refer to SAP that's used. We can refer to specific things, that the process, the documents that are used, management reviewing the draft financials, who does what IT is involved, what if things are wrong, how are they corrected, all those things from the slides from earlier on. What do we need in our information system and communication? Then, at the bottom, we have a question that says, do you plan, remember the 4 points when we have to document controls? 1, controls over journal entries, we've done that one. 2nd, controls over risks, we haven't come across any of those yet. And one of the other options is when you want to test controls as part of your audit response. Do you plan to test controls over financial statements? No, and therefore no table here. to record any controls. If I had said yes, let's just see what it looks like then. If I had said yes, I want to record control, I want to test controls, I want to see if I can test controls, then you will have this table. It's currently blue because there aren't any controls. You'll go record the control and then obviously hopefully be able to test them, because you're going to consider the design, you're going to consider the implementation, and then because you wanted to test them, you're probably going to say reliance intended yes, if the control is appropriately designed and implemented. Right, next, I'm going to skip the property, plant and equipment. We are working with inventory and operating expenses. So let's look at the inventory section. In inventories, this section is activated, which tells me that there is probably a risk recorded, and we will see that just now. And this year, I have not documented the system description yet, but it does then prompt us to document the process and policies, both automated, how are the transactions initiated, recorded, all of those terms that we had mentioned earlier on. What about accountability of the items? What about the integrity of the data? Describe the accounting records, specifically mentioning the records that are used, and so forth. You are prompted on and on and on. What we do see here for step 5 asks you to perform a walkthrough to confirm your understanding of the process. Okay, so let's just be very clear here. This is not an implementation test as I would have had for my implementation test over a control, either being the journal entries at the top where we considered whether those controls were implemented. That could have been done by a walkthrough. It is also not, well, yeah, we hadn't even said if we want to test controls, and I'm just going to assume we don't want to test controls and say, no, we don't want to test controls. For operating efficiency, we're just going to perform substantive procedures. What this step is in this case, in fact, I'm going to show you the one for OPEX. Let me show you. This is where the whole system is documented. You can see all the points, you can see the procedures, the journal entries, all those things. Now, the walkthrough is documented very similarly to the way that we have documented the a walkthrough that you would perform for an implementation test. It says there's selected computer expense with reference. This is the reference. We agreed the transaction to the supplier invoice, inspected the creditors reconciliation, etc. Important here, we followed not controls because we haven't even identified controls. We followed the flow of the information. Yes, we are also specifically identifying the document number, the person, Palesa there, who captures the supplier invoice. We mentioned this and this expense, that and that supplier on such and such a date, etc. But that is to confirm so that if any other auditor, although standard always refers to the reasonable auditor, has to understand what I did and be able to re-perform what I did, that person needs to be able to go and select the same invoice or whatever it is, and that's why they can then go to PN5698, go and select that one and walk through the flow of the information for this transaction until it gets to the creditors reconciliation or to the amount recorded in the general ledger. Okay, why is this walkthrough in here if we're not even considering controls? So in the planning section, one of the questions that we were asked in 1050 gathering information was where we had the option to say, how do I want to make sure that I understand the client's process? How do I want to corroborate, confirm my understanding of the client's processes? And in our file, we chose that we are going to perform a walkthrough to confirm our understanding of the system description. So we're not just going to ask the client, what do you do? Oh, okay, yes, step 5, 6, 7, 8, 9, 10. Thank you very much. Put it on the file and forget about it. We are going to say, now show me a transaction so that I can see how this also played out. And so that is what we chose, that we're going to do a walkthrough, and that is what 0.5 on our screen is indicating to us. Okay. If it had been a walkthrough for an implementation test, we would have not just mentioned documents and processes, we would have also mentioned the control elements that we are testing. So in almost like a control procedure, test of control, identifying activities that were performed, re-performing certain things, etc. That was part of the control that had to be executed by that person. But now we are just following the flow of the information through the process. Good. So that is then per each of the sections. I just want to show you the general IT section. Also, this is where you would come and record the general controls then. Are the accounting software used? And we said yes. We can say yes, it is used as part of. And then again, lots of questions about IT controls. And then we can identify controls. The risk, and identify record controls that we are wanting to rely on, the IT controls, and of course testing them as well, if they are designed effectively and implemented. Right, and then we've got the conclusion at the bottom. And we'll probably come back to this again next week after we've also looked at the revenue system descriptions and the controls that are possibly implemented there. But then having looked at all of the information system and control activities that we needed to, then we need to conclude, considering all of this, whether the information system and the communication appropriately supports the client's preparation of the financial statements in accordance with IFRS for SME. So knowing what we now know about the client systems and how the financial statements are done, is the system overall, the information system, sufficiently designed? Yes or no? Is it appropriate? So having considered all of that, for now, I'm going to select appropriate. We will probably, again, come and have a look at this next week again. Right, that is 1150. We have done what we needed to. I've not looked at revenue. We're going to look at that next week. But we have had one instance where we had a risk. I want to actually just maybe go to something that doesn't have a risk. If we even just look at almost anything, trade and other receivables, I think has a risk. So you'll see that it's also activated. It's prompting you for that. But any of these other sections that are not activated, you can know that they do not have balances, or sometimes they've got balances, but more importantly, they do not have risks associated with them. So I've not recorded a risk of material misstatement, low, medium, or high, or significant risk. There's no risk recorded for these sections, and that's why the section is not activated in 1150. If I do end up looking at the risk assessment document at the assertion level, and I do end up recording a risk, that's why I said, please go back to 1150 after you've completed 1160, so that you can see that risk and make sure that you are actually then also documenting the system description for that. Okay. I'm thinking again about that one question we had earlier on about the just stand back from the beginning and saying there's no risks. You have to consider whether none of those inherent risk factors are effective and all of those things. And then sometimes there might actually be a risk, and you might actually go and document your system description. Also, of course, the client might be very simple. It might just be a property company or dormant company or something like that. So let's assume if it is a the word that comes to mind now is a proper company, but that sounds like the other one is not proper. If it is a trading, operating company that's manufacturing all those things, I struggle to understand and be convinced that there's really no risk of material misstatement. Right. Good. So now we're going to go and have a look at 1160, the risk at assertion level, and to see how do we document all of these considerations that we had for, in our case, the inventory and operating expenses sections. So this is now 1160. It's basically like our last document for risk assessment that we have. What I want to also just point out, because I keep seeing this in the document, it is a, let's call it a known issue. Okay. There is some in the programming, for some reason, whenever you record a risk, there is an uncategorized risk that's also recorded. It is a known issue in the current version that you'll see. So we're currently working in the version 20.23, 2024.20.23. There's a lot of 20s there. So if you do get a blank one, you can literally just right click and delete the risk, and that's fine. Okay, right at the very top, uncategorized risks. I'm just going to delete it. They do bother me when I see them, so I can just imagine they're going to bother you. Okay, it's really just a little script that's a bit of a challenge. It looks like there's a question coming in before I move on to the risk assessment. Let me just quickly see. This is a difficult question. I just want to read it out loud, and then I'm going to see if I can answer it. It says, in terms of the walkthrough performance, should we choose yes in terms of testing the control? We should take it from the process, then document it below and test it separately, specifically on the test of control section rather than the walkthrough. Is that correct? So the walkthrough that we were looking at, let me show you that just. The walkthrough that we were looking at in 1150, just want to give the script a moment to run. We were looking at the walkthrough here in operating expenses. This walkthrough is specifically done to address or to make sure that we understand the system description. So we didn't go and identify any controls. If it was a scenario where we are getting to the walkthrough of controls, what you would have done in that scenario, I'm going to actually now change, I don't want to change it in operating expenses because then next week I'm going to be confused. So let me just find, I'm going to go, Let's do bank overdraft. Okay. For bank overdraft, I'm going to record a risk. I know I won't be using this next week. Do we plan to test? So we've done everything. We've done the walkthrough to confirm the system description that we have for the bank overdraft. Now we say, do we plan to test the operating effectiveness of the controls? Because do we plan to test the operating effectiveness of the controls? If we then say yes, then I have to go and identify controls. So we don't have to identify controls if it's not a significant risk. If I have a risk, I need to document a system description, just the flow of information. If I have a significant risk, I must go and document the controls. In this case, I don't have a significant risk, so I have a choice whether I want to identify the controls. I wonder if I'm answering you now, Carol. Please let me know. If I'm not, we might have to take that offline so that I can just clarify your consideration. So if we need to maybe do that after the session. Right. I'm moving on to 1160 then. Good. So let's just recap what we have in property, plant, and equipment. In our understanding of the client, we recorded a risk to say that the machinery required more maintenance than we expected, and therefore we recorded this accuracy valuation allocation risk. I think it was session 2 or so, where we had recorded this risk. So that is already in there. There was also another one about the useful lives and residual values that was in there, and all of that is recorded. Neither of them are significant risks, so we needed a system description, but we didn't have to go and identify controls. We can see that the value is material. How do I know that? Because we've got that little red star there, so that's indicating it exceeds my overall materiality, right? Overall materiality. And it shows me the percentage change. If that was important, I can even see 2 years back. Then it takes the highest risk assessment for each of those assertions, the inherent risk. It takes the highest ones and it allocates it to the section. So you can see we did not record inherent risk for completeness, existence and occurrence, rights and obligations. I do have 2 risks for accuracy and valuation, and the highest assessed inherent risk in my table is high, and that's why the one that's going to flow through to the responses is going to be high. Nothing for cutoff, because cutoff is not relevant to account balances, so that's why I've got a not applicable, and I did not record any inherent risks for presentation and disclosure. I then have specific materiality. Now, the default for specific materiality is always the performance materiality. So if you were to go back to the materiality working paper in 1060, you would see that our performance materiality was set at 800,000. So by default, the specific materiality for every section is going to be performance materiality, and I can then just adjust it preferably downwards if I feel that there is any user that's going to be extra sensitive to a mistake in that value. Why am I saying preferably downwards? If you remember, we said that the difference or the space between overall materiality and performance is the gap for undetected misstatements. So ideally, we don't really want to make our specific materiality higher and therefore make the gap smaller. But we might want to say, for this account, I might want to leave the gap a little bit bigger. Right. And then I've got the cell here where I could, if I wanted to, explain our reasons for both the risk assessment and the materiality assessment, that 800,000 specific materiality. I don't believe that it is really necessary for us to document it in there. If you have clearly and carefully documented your risk assessment procedures, documented your description of your risk implication, etc., I think it's quite obvious how you got to your inherent risk assessments and your materiality. Right. That was just firstly for property, plant, and equipment. Then looking at inventories. For inventory, we have a risk here where we say inventory may be incorrectly valued because of estimates being used in work in progress. Remember, I said work in progress is active, so we switched that on in 1051, understanding of types and volumes of transactions. Now we've even got a risk here, saying, oh my goodness, maybe that's a bit difficult. And we said subjectivity is the factor there. Right. I currently have a medium risk. Now, let's say we don't agree with this. I want to show you how do you edit a risk. If I wanted to make that a high, you don't have to delete this and start from scratch. You could simply just at any of these points, just right-click and then have edit risk as an option. If you want to record a new risk, you'll go there to the risk button. But if I just want to edit the one that's already there, I'll click edit risk, and that will go into the risk dialog. So let's see what that looks like. So now at the top, it's warning me and saying, just note, your risk mode is now active. So you need to first complete this and exit that before you continue with the rest of your file. So the story, the description of the risk is perfectly fine. I've got the inventory section tagged in here already. You could tag other sections if you wanted to, maybe, I don't know, cost of sales or something like that, if you felt that was relevant. And then we had the inherent risk factor as subjectivity activated. Our implication was the misstatement. We said it's ABA. Let's say I say, well, it is likely, but you know what? The monetary impact is not just medium, it's actually going to be high, right? You can see that the combination of those two automatically tell me what the inherent risk is based on basically the programmed spectrum of inherent risk that we have. So if I adjust either of these upwards in this scenario, then I will have the inherent risk factor go to the higher end of the spectrum. Does that sound familiar? Higher end of the spectrum is now indicating that maybe this is a significant risk. So automatically then Probe says, consider whether the identified risk is a significant risk. You've identified a risk, assessed it at the higher end of the spectrum. Is this a significant risk? I'm not going to tag it as one in this case, and then I can literally just leave it as is. It also asks me if this is perhaps one of those scenarios where we said, like with a retailer, where we need to go and identify controls and actually test them if there are any, because substandard procedures alone is not going to be good enough. If that's the case, you will tick this, and that will then also prompt you in 1150, information system and controls, to go and identify those controls, so that you have controls to test if they are sufficiently designed and implemented. All right, so I'm going to keep this on high so that we can remember that when I have a high inherent risk, I am prompted to consider if it's a significant risk. If it's not, it will just remain high. I can click the submit button and I will continue with a high risk of material misstatement, not a significant risk of material misstatement. Right. Risk assessment at the assertion level for inventories, and that's that. I'm going to also just have a look at operating expenses, and then we will go and see what the audit plan and strategy looks like. This document has a lot of scripts that needs to run, so you will see that as my one colleague says, the mesmerizing blue circle really, really, really mesmerizes you. It turns and turns and turns while the script runs. So let's just be patient with that for now. Good. That was inventories. That's because I'd opened up that risk dialogue. So I'm not going to do that for expenses as well. Okay. Operating expenses. We will see here that because this was already included also in the level 1 section, you will see there's a lot of risks raised. Note there is no risk raised for, oh, goodness gracious me, there's no risk raised for completeness, so we will not expect to see any completeness-only work procedures in the work program. In the presentation and disclosure, I have one risk with low inherent risk, and I have one risk with medium inherent risk, so we expect to see the highest of the two being medium in the presentation and disclosure inherent risk. Okay, so those are probably the two main things to note in that regard. Remember to go back to 1150 to check each of your sections afterwards and make sure that you might need to go and record more controls. Next up then, I want us to, after we've done the risk assessment, now go and do our audit plan and strategy and go and check and see how will my work programs now change because of what I've done in my risk assessment. Okay, now you might see that I've got all the documents open at the bottom. So because I've changed certain things, I need to just refresh the tables. If the documents were closed and I'd opened them up for us now, then they would have already run the scripts by themselves, and I would not have had that yellow reminder there. So let's just quickly refresh the tables and then see how that has changed. Okay, it looks like it's still not happy, but I'm going to, I want me to click there. So first of all, while that is running, first of all, I will have, as you can see in the screenshot, the risks at financial statement or overall level. So there's a summary that appears in there for the inherent risk, the fraud risk, the control risk. Remember, those risks have responses at overall level. So we'll look at them and see if they are appropriate. In our scenario, we chose not to let any of those risks also influence the risk of material misstatement. So those responses will only be at overall level through assigning a different level of staff, more supervision, more professional skepticism, and all of those things. Then we have these overall audit considerations, which is effectively saying, do I now believe that I'm going to use a management's expert, an auditor's expert? Am I going to place reliance on audit evidence obtained through control tests performed in previous periods, or work performed by another practitioner? Maybe someone's going to help me attend a stock take, things like that. All right. I'm going to just make this one a yes so that we can see what the impact of that is. The others, they can just be blanks or zeros, and they will have the same impact. When we look at property, plant, and equipment, there we've got our risks. The risk was AVA, so that's there. That one question about the standback, this is also where we would normally get the standback. But because I've already got the risks recorded and I've documented everything, I'm not prompted to do a standback because I have, in fact, recorded a risk. Right, next week we will see where I do not have risks recorded, what is the standback there. In this case, it's inventory. Sorry, it's not PPE, it's inventory we're looking at. I've got the high risk for AVA. I must attend the physical inventory count. There's no choice there. We must always attend it. Even though we do not have a risk for completeness or existence, we have to still attend the inventory count when inventory's balance is material. All right. You will see that I marked there, we will, at the top, I said, yes, we will rely on work performed by another practitioner. And in every section, I'm now going to have this little block available to say, are you going to rely on the work performed by another practitioner in this block? And if I say yes, there will be work activated in my work program to actually go and document that. For the others that I didn't respond to or said no, I do not have the option or the need to go and document them for each case. The nature, timing, and some standard procedures, including unpredictability, is one of our responses from a fraud perspective. And that's why this one comes up on each one to say, is this where you're going to do your fraud response for management bias and override of controls in each of those cases? Right. If we had a significant risk or a control test that we wanted to do, that would come up there. Otherwise, we always have required procedures, and we can choose to have any of the additional ones. And then from ISA 540, accounting estimates, the standard says you must always respond to an accounting estimate by at least one of these three options, being testing or evaluating events after reporting date, or testing management's estimate, or developing your own estimate, one or a combination. This is where you will switch on the procedures in your work program for inventory in this case, and for each of the other estimates in each of the other accounts. I'm going to open the work program for inventory so that we can see where all of these things flow through to the work program. So we've done a lot of work actually today. We've said there are work in progress. We've recorded a risk. We've said we're going to attend the stock down. Well, we must. We said we're going to use another practitioner to help us attend the stock down. All of those things are now going to be reflected in the work program. Okay. So if we open up 40510, that's the inventory work program. And maybe let me just show you also. I just clicked without showing you. So next to that header for audit procedures, that's where I've got a little hyperlink to go there, to actually just go. It's part of my planning is to go and look at the work program and see what is currently in there, and are all of those procedures actually appropriate, or can or should I hide some of these procedures, amend some of these procedures, of course, in line with my firm's policy. So some firms only allow managers to make changes. Some firms allow any of the staff to make the changes, but the purpose of the methodology is not to say the procedures that appear in this table is cast in stone. They are basically from a library of generic procedures, yes, adjusted according to your tick marks, but your client's inventory might be different, and you need to adjust the procedure to show how do you actually test this client's inventory. So please, if your firm's policies allow for it, adjust the work procedures so that you've got the appropriate procedures to clearly document what it actually is, one that you plan to do, and afterwards to show what it is that you actually did do. To amend them, you literally go to that step, right click, and you say enable editing, which will then make it an input cell. And you can type it as you need to. Once you're done, you can even switch on assertions if you have to. I just now selected one of the generic ones. Okay, so that's why there's no assertions. And once you're done, you untick enable editing, and that will just be a normal procedure again. Okay. Right, so that's editing. You can also hide procedures, ignore this procedure. Please don't ignore the procedures based on the standard paragraphs, because those are the ones that are helping you to comply with requirements in the standards. You can insert comments below those if you need to. But yeah, be careful of the ignore this procedure option. Good. Now, let me just quickly see. So we start off with the reminder of what the risk assessments are, the assertion level risks, the materialities. Okay. Then we have the identified risks as a summary, which assertions. So what we can know from this is that all the procedures that has accuracy, valuation, allocation linked or ticked for the inventory section will be activated. And so, yes, I might see other assertions also, but it's activated because of the AVA one, right? Or AVA, as one of my colleagues refers to them. Then I will not see any completeness only procedures because they've been hidden. So we didn't record that as a risk. So that will definitely not be reflected there. And then you can see also that some of the procedures have already maybe been performed. I can also go, please, you are most welcome to go and see which ones are not appropriate and then actually change them. I want to just see the work in progress procedures. Sorry if I'm scrolling a lot now. That's inventory, worksheets. Stock sheets, material items. My eye's not catching the ones on the work in progress, but I know there will be procedures for work in progress because we switched them on in there. There's my journal entries, which are the standard journal entry responses from the fraud response. And then at the bottom, I've got the conclusions, which you already know from audit level 1, that I will complete after I've done the work. Right. This year is where we said the risk assessment for control testing will come in later on. So basically, where we don't consider controls or we don't test controls, we don't consider to rely on them, the inherent risk assessment is the same as the risk of material misstatement. There's no effect from controls because, well, the controls don't increase the inherent risk. They will only reduce the risk of material misstatement. Right, so once we are then happy that the procedures that are included in the work program are appropriate, that's when we can then say, right, now we've done the audit planning. Also, just remember that we have the tabs, the transactions directly related to inventories. So there are tabs for a number of the sections in inventories. You can basically look at the document map. If you don't know where the document map is, remember where you switch it on and off. Okay? If yours is maybe not showing, switch it on, please, if you need to, if you want to. And that will then help me to see whether there are any tabs in this section. You would have also had a procedure in the required procedures that would have linked you to that if you needed to see it. But just so that you know that we often then have for the account balances, we have transactions related to them. The last document that I want to look at today then is the planning memorandum. Okay, that was the document that we used as an agenda and also to document our minutes for the planning meeting. You might remember that one. What I want us to just see there is to see that the audit strategy, the audit plan rather, shows a summary of what we had decided. So for property, plant and equipment, we've got required procedures. For inventory, we've got medium 3 for AVA and required procedures. There are some others, trade and other payables, where we have selected to test controls, things like that. Okay, so they've all been set in 12, 20 and before from our planning sections. But this is a nice summary then to just quickly see in your planning memorandum. There's another point that I need to just quickly point out to you on 1220. Apologize for jumping back and forth now. But having worked through all your sections, please remember to go to the bottom where there are considerations about professional skepticism that also needs to be considered. And then next week, we will again talk about this bottom part. But this is effectively saying your stand back for, have you identified all risks? Have you considered all inherent risks? So there it says, did you record a risk for all instances where inherent risk factors were identified? Now, not just identified, but where they were identified to have an impact on the possibility that there may be a material misstatement. Right, so in other words, what this is saying is assertions for which the risk factors are identified should not just be selected on by ticking a selected assertion in this block. You should use the risk record button to properly record the risk in 1160, because what happens then? Then you are prompted in 1150 to document the controls around that. Sorry, I'm lying now. To document the system description. When you record a risk, let me start again. When you identify an inherent risk factor, you should not just tick or select the assertion in 1220 here. I'm going to show you where just now. You have to go and record that as a risk in 1160, because what happens then? Then the section is activated in 1150, the information system and communication, where it prompts you to document your system description. Because when you have a risk, you should document your system description. So this is saying, don't just quickly activate the work program steps by selecting an assertion. If you've got a risk, record a risk so that you also have your system description. What is it talking about? It's basically saying, let's just use inventories again. If you identify an inherent factor, inherent risk factor for, let's say, completeness, don't just click here, selected assertion. Yes, you're going to have procedures in your work program, but it's not the right way to document your assessment of the risk. Okay, that's why I increase your risk assessment. We're saying, don't just tick there, don't just select an assertion. Go back to 1160. If I'm not mistaken, this actually takes you there. I'm not sure now. I don't want to click and then I'll make a mistake now. But go back to 1160 in your risk assessment document. Record the risk, document your likelihood and magnitude, document your inherent risk factor that you've identified, all of those things, so that your file has a complete record of why you are performing certain procedures, certain responses. All right. Then the last question in this conclusion, so that was the one with the red instruction. The last one says, do you approve the audit plan and strategy? And when I say that, what does that mean? It doesn't mean, oh, now I'm taking the partner's role and I'm saying, yes, the planning was perfect. That's not at all what I'm doing here. Effectively, I'm just saying I'm done doing my risk assessment. All these places where it currently shows risks of material misstatement, where there actually are no risks, that is just a calculation in the background. I want to hide that. Okay, that's plain English for us. The fancy probe English says, assertions with no risks identified and not selected for testing will be indicated as NRS. Okay, let's go back to inventories again. So you can see here, the risk of material misstatement is medium 1, but there's no risk. Medium 1 for existence and occurrence, but no risk. Rights and obligations and presentation disclosure. Of course, for AVA, I must have a risk of material misstatement because I've recorded a risk. Okay, but now remember what these ones are all medium 1. When I go to the conclusion and I say, yes, I approve the audit plan and strategy, I'm done. Please hide all of the other ones so that nobody gets confused. What does that do to my inventory and all the other ones? It now says, you know what, there's no inherent risk, and I did not select that assertion as part of my standback. So there's no risk, none selected, NRS, NRS, NRS. What is the ROM here? Very clearly, it's only in AVA I've got a ROM of medium 3. Right, that's really what the question says. The moment I remove that and I say I haven't done it yet, so I don't have a no option, just the moment I remove the yes, it's back. It says, okay, there's a mathematical calculation in the background. I'm still showing it until you tell me to hide it. Good, that's effectively what it does. Right, so that's brought us to the end of today's session. I want us to just for the sake of it, show the final slide. Thank you for joining us. I'm happy to take more questions. Please join us next week. Next week is our, I almost want to call it our grand finale. Next week, we are going to finish off with the presumed risks. We are going to finish off with revenue. We're going to look at what happens when I have a material balance where there is no inherent risk, and how do I document my planning for those sections.